Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Southern Missouri Bancorp Inc. quarterly report. Southern Missouri Bancorp Inc., the bank holding company for Southern Bank, provides a wide range of banking and financial services to individuals and corporate customers across the United States. At its core, the company offers various deposit products such as interest-bearing and non-interest-bearing transaction accounts, money market deposit accounts, savings accounts, certificates of deposit, and retirement savings plans. In addition to deposits, Southern Missouri Bancorp also provides a variety of loan options, including mortgages on 1 to 4 family residences, commercial and agricultural real estate loans, construction loans for residential and commercial properties, business loans, and consumer loans. The company's services extend beyond lending with the provision of fiduciary and investment management services. Furthermore, Southern Missouri Bancorp offers insurance products, both commercial and consumer, as well as debit or credit cards to its customers. With a rich history dating back to 1887, the company has established itself as a trusted financial institution in Poplar Bluff, Missouri, serving the needs of individuals and businesses alike. Unfortunately, I am unable to provide an essay as no text was provided. However, I can suggest some possible reasons why Southern Missouri Bancorp, Inc. stock price may have increased slightly over the past year. The company's financial performance has been strong, with increasing revenue and net income. This could be due to a variety of factors such as effective management, strategic investments, or a growing customer base. Additionally, the banking industry as a whole has seen an increase in demand for services, which may have contributed to Southern Missouri Bancorp's stock price growth. The company's ability to adapt to changing market conditions and meet the needs of its customers could be another factor. It is also possible that investor sentiment towards the company has improved, leading to increased buying activity and higher stock prices. This could be due to a variety of factors such as changes in management, new product offerings, or a stronger brand reputation. Overall, it is likely that a combination of these factors has contributed to Southern Missouri Bancorp's stock price increase over the past year. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified through a review of various factors. On the growth side, an increase in net interest income is a significant contributor, driven by a 6.6% rise in average balance of interest-earning assets and a 23 basis point increase in net interest margin. Additionally, non-interest income has also seen growth, with increases in service charges on accounts, fees from loan origination and servicing, investment income, deposit account charges, bank card interchange income, wealth management fees, and insurance brokerage income. Asset valuations and transaction volumes have also contributed to revenue growth. On the decline side, a decrease in non-interest income has been observed, primarily due to lower other loan fees and net realized gains on sales of loans. Furthermore, the market value of assets managed and administered has decreased, contributing to revenue decline. The net income of the company experienced a significant increase over the past 2 years, with a growth rate of 24.7%. In 2024, the net income was $27,110, which rose to $33,800 in 2025, representing an increase of $6,690. This trend continued into 2025, where the net income jumped by $3,497 from $14,653 to $18,150. The profit margins also witnessed a notable improvement during this period. The net interest margin increased by 23 basis points, rising from 3.34% to 3.57%. Additionally, the annualized return on average assets and common stockholders' equity saw significant growth, increasing from 1.14% to 1.33% and 10.7% to 12%, respectively. The reasons behind these improvements are not explicitly stated in the provided text, but it can be inferred that the company's financial performance has been enhanced due to various factors such as efficient management, strategic investments, or a favorable market environment. The company's financial performance indicates a strong ability to generate cash from its core operations. A key indicator of this is the positive operating cash flow, which measures the amount of cash generated by the company's daily business activities. According to the provided data, the 6 months ended December 31, 2025, saw an operating cash flow of $37,550. This figure not only reflects a significant increase in revenue, but also demonstrates the company's efficiency in managing its expenses and generating profits. The positive operating cash flow is a crucial aspect of a company's financial health, as it enables the business to invest in growth initiatives, pay off debts, and reward shareholders. In this case, the company's ability to generate positive operating cash flow suggests that it has a solid foundation for long-term success. The company's debt level has undergone significant changes over the past year. While total debt increased from $4,474,915 to $4,527,027, a closer look reveals that some components of debt have decreased. For instance, net increase in loans decreased by $47,486, and FHLB advances dropped by $2 million. Additionally, purchase participations in loans decreased by $40.4 million. However, total debt securities increased by 0.8%. These mixed signals suggest a complex picture of the company's debt level. In contrast to the fluctuations in debt levels, interest expenses have shown a more consistent trend. Total interest expense has decreased significantly from $61,998 in 2024 to $29,362 in 2025, representing a 52.7% decrease. This substantial drop indicates that the company is paying less interest on its debts. The accrued interest payable also shows a slight decrease, and cash paid for interest was lower in 2025 compared to 2024. Overall, the data suggests that the company's interest expenses have decreased substantially over the past year. Management is emphasizing the importance of adapting to a competitive financial landscape. The bank acknowledges that it faces significant risks, including competition from other institutions, which necessitates careful evaluation of its strategies. In terms of strategy, management is focused on growth through loan origination and investment securities purchases. This growth will be primarily funded by deposits from retail and commercial clients, public units, brokered funding, and FHLB borrowings. The bank also intends to expand its deposit base by offering attractive products and attracting new relationships. Furthermore, management is considering the impact of new accounting standards on the company's financial statements and related disclosures. They are also exploring opportunities for strategic expansion in attractive market areas. Overall, the bank's strategy centers around prudent risk management, growth through deposits and investments, and strategic expansion to maintain its competitive edge. The company has a history of rewarding its shareholders through both dividend payments and share buybacks. In terms of dividends, the company has consistently paid out a certain amount per share in recent years, with $0.25 per share in 2025 and $0.23 per share in 2024. This indicates a commitment to returning value to investors. In addition to paying dividends, the company has also engaged in share buybacks. In one notable instance, the company utilized $8.5 million to repurchase 156,000 shares. This demonstrates a proactive approach to managing its capital and reducing the number of outstanding shares. That concludes the financial summary for Southern Missouri Bancorp Inc. Feel free to comment below, and I will be happy to answer them when possible.